Folks, that is right. You know what it is? It's that special time of the month. Every single month I told you I will be unveiling this portfolio, showing you everything going on. 100% transparency. I don't mess around, folks. So, even if things aren't going well, I'm still going to show you. That's just a thing I do here, okay? So we're going to go through every single position and show you how that went for us this last month. So a brief overview of the portfolio here. You can see valued at $41,335. Obviously, at one point was valued quite a lot higher. We look at past performance. Last week was a pretty positive week for us, as it was for everyone, really, at 5% or $2,000. The last month, we are down 3.24%. The last 3 months, down 9% or $4,000. And over the last year, we are down 10%, nearly 11%, down $5,000 in this portfolio. Rough to see. If you look all time, we are up 34.47%. Or 10,500. This is since 2017. July of 2017 is when I started this portfolio. Not terrible, all things considered, but you see this massive dip we had. Obviously, we were up massively before this, and then since we've seen quite a nice little dip here since the start of the year. There's no doubt about that. To put it into perspective for the general market, we look at the Dow Jones. Down only 5% on the year, on the last month, only down 0.67. People are kind of flooding in a little more heavily into these value companies, and we have kind of a good mix of dividend and value. We'll get into that shortly. Year to date, down 9.63. The S&P 500 down 1.1 over the last month. Over the last 3 months, down 6.12. Year to date down 13.85, and the last year only down 2.33. We're a little bit more in line here when you look at the NASDAQ because we have quite a bit of tech in our portfolio. Down 4.73 in the last month, 13.1 in the last 3 months, and year to date down 23.67, and the last year down 13.14. So you look at us and we're not quite that far, we're not quite that down at least. But we have quite a lot of tech in this portfolio, so keep that in mind. All right. So with that said, we look at, I mentioned there's quite a focus on dividends in this portfolio. I use this app or this website called Track Your Dividends. Very nice. Our current yield is around a little bit over 4%, 4.11 as you see. Yield on cost at 5.34. That's kind of stayed steady because I've been buying a lot more, even if some of these positions I'm up quite a bit on. And our annual income right now, if you know from last month, has skyrocketed quite a bit. Right now sitting at right around $1,700 because we've been buying a lot of these big, nice companies. So it's very nice to see that. So let's start getting into this portfolio. So, while I have a voice left, let's do it, folks. And our M1 Finance portfolio, we'll be unveiling that one tomorrow. Hope you're excited. We're going to be showing the video tomorrow for that one. We start here with our largest in Apple, Dapple. So what do we have with Apple? Now here's a bad thing, all right? I recently transferred over my Stash Invest account into my Robinhood portfolio. And this has messed with the cost basis of a lot of these positions, unfortunately. Apple was one of my most proud positions here. We were up over 200% on Apple, but now you won't be able to tell that, okay? 27.6 shares, though, of Apple. Our average cost was right around $40 with Apple. I mean, this was a massive position for us. Right around $47, I believe. So we were up big time, and unfortunately you don't get to see that now. But if you look back in this series, you can kind of see where we were prior to that transfer and compare it in that aspect. I just wish they would have, Robinhood would figure that out. Facebook, this one, unfortunately, I do have the cost basis on because I say unfortunately because this thing has been an absolute stinker over the last 3 months. The last year, an absolute stinker, down 41%. So this is why our portfolio has been seeing worse times. This position's been one of the worst ones. 186.12 on the cost basis, 13.45 shares. Total returns here, only up $87 or 3.5%. Not great, folks. Not great. Microsoft. Oh, yeah. We have Microsoft as well. Cost basis of 103.61. This one's still been a beauty for us, okay? 4.61 shares, up $760 or 160%. That's been a beauty for us. Can't lie to you. Then we have AMD. All them girls. I don't know why I said that, but it's not all them girls. It's AMD. I don't know. Sound like Sean Paul. Anyways, I've got one share at $79.69. A good sentiment there. So my overall return here is at up $20 or $26.39. This is good too because this is one I transferred as well. So you see that's kind of trying to figure itself out. Good to see the cost basis transfer over on this one. But again, that's why it's only one share because that's what transferred over. Wasn't in the portfolio originally. Disney. Oh, yeah. Disney, cost basis on this one. I've been buying more, so it's been going up. 104.04 on the cost basis, 8.1 shares. $37 up, or 4% only. Not anything significant. This one's also been horrific in the last year. Over the last year down, a similar around 40%. It's been a darn rough time. Then also in our experiences, a little segment we have Carnival Cruise Lines. This one, oh yeah, we're still down on this one, unfortunately. We were up when it was around, even just the last month, we were up quite a bit. You look over the last 3 months, we were up quite a bit here in the 20s, but not anymore, unfortunately. Cost basis of 16.10. This is a position I transferred over as well. Total return here down $69 or 13%. I feel really good about this one when we talk over the last, or really over the next year to year and a half. Experiences I think will do well despite economic conditions. People are still eager to spend money on experiences. And we've seen great data, from these companies already as far as demand is concerned, and I feel pretty darn good about it. So then we have AbbVie. We're getting into the biotech industry here with a couple companies. And we start with AbbVie, which has been a fantastic success for me. It's cost base of $79.41, 5.9 shares, up $404 or 86%. So that's been a big winner for me for sure. Gilead Sciences following them. Cost base is at $63.62, 9.34 shares. Pretty well a wash on this one. I'm even on the position, excluding dividends, which pays a nice dividend over 4%, so pretty happy with that. Ford, the cost basis is still messed up on this one, but my cost basis on this portfolio, I believe, was right around $9. And we've added more to the position too, but our cost basis should be floating around $9. Actually, probably less than that because on my stash account, the shares were valued a lot less in terms of my cost basis. But we'll see what that looks like. You'll just have to believe me. 88.7 shares, 2.8% of the portfolio. Should be up quite a bit on this position, all things considered. Once that adjusts, hopefully within the next month it does. New York Community Bank's been in the portfolio for literally the dawn of the portfolio. Literally since the beginning, folks. Since the first month of the portfolio, I've had New York Community Bank. And you know what it's done for me? Kind of bupkis, okay? Besides dividend, really bupkis. $10.58 a share, 35 shares. Nothing massive here, but we are down 6%. If you include dividends, we're not really down all that much, but because it pays a decent dividend, but that's all you have to mention there. We're really up on the position, I should say, if you include dividends, but that's all right. Charles Schwab, don't believe the cost basis on this one because it's not true, okay? We did have a TD Ameritrade position prior to this, which we were up quite a bit on, that transferred over to cost basis around $30 a share, and Charles Schwab here obviously bought out TD, and this is what I got. But I do have 4.07 shares. The cost basis It's not quite there. 5,000% up isn't accurate, but it makes me look like a genius, okay? Looks like I've invested in Charles Schwab stock since 1920, but I haven't been. Target, following them, was a massive winner prior to really the last month. As you see, it's been down 28% since then. Oh, it hurts. I was up so much more, up over, really, I mean, I doubled my money easily. And now here we are. 103.65 per share, 7.5 shares. Total return of $451 is still beautiful, but it hurts quite a bit to see a 28% downward movement in a month. But we still are up 58%, so not bad, but it hurts. It hurts to see. It hurts when I poo. Then we have Costco, one that I transferred over as well. We see our cost basis at $325.10, one share here, with a total return of $138 or 42%. Thankfully, that cost basis did show up because it was only one share. I'm sure that was pretty easy to calculate for them. Thank you, Robinhood. Now we have to sneeze desperately, but we're going to see if we can hold it in. It's very painful, but I'm holding it. Oh, gosh. Then we have Kohl's here. Cost basis of $31.07 a share. 25.29 shares. Total return of $246 or 31%. I'm pretty happy with Kohl's, but we've seen a pretty rough month again with really all of retail as a whole besides Costco. Actually, Costco's still been having a rough month, okay? Not really because of they've had great earnings results, but they fell with everyone else. Tapestry, this is a big winner for us. $17.66 a share. 23 shares. Total return of $387 or 94%. I mean, that's beautiful. Beautiful to see that. The money's nearly doubled. If you include dividends, the money is doubled, folks. Then we have Stitch Fix, and just as we get into a great success, we then get into a great failure. $19.63 cost basis, 21 shares. Down $232 or 56%. Let me just tell you, folks, this is the epitome of holding with diamond hands. At one point, I was up. I'm talking about this share price reached $100 a share, and I held on to it while I had this position, while I had it, and I didn't sell it. Now I'm kind of stuck, and I'm going to be holding it, and then it bounced back up again, and I didn't sell it. We were up 4 times. We were up 5 times our cost basis, and I didn't sell it, folks. I'll call it out when I've made a big mistake, and I did there with Stitch Fix, and now I'm holding on, just hoping we can at least get back to break even. It's going to take a while, but I think we will. Just the capital's not being used properly. It's been an epic fail, folks. Home Depot, not an epic fail though. $164.58 a share, 1.04 share. Now I had this one share since really the dawn of the portfolio. We've been reinvesting the little bit of dividend I get there too, up $144 or 84%. That's at least a big win too, though, right? We'll take that as a win. So that's it for the retailers. We're getting into some of the consumer discretionary type funds. We have Coca-Cola, $45.56 a share, 7.68 shares. It's been a pleasant surprise for me. $138 up or 39%. Coca-Cola's been a consistent rock, baby. Consistent rock. Starbucks, not really a consistent rock. Can't lie to you. $66.03, my cost basis. 4.14 shares, nothing crazy. Up $46 or 17%. It's all right, all things considered, but it's been having a rough month. Really everything has, if I'm being honest. Then we get into iRobot. Look, folks, do we have to keep talking about my failures? I'll do it. Another Stitch Fix situation, $52.38 a share, 9 shares, down $40 or 8%. Nothing crazy, but you look over the last 5 years, and this thing was up over $130 at one point, and I didn't sell it. I was up double my money. I think we'll get back, folks, but it's just sometimes I got to call myself out when I'm being dumb, and I have been. Micron, we get into this lovely chip semiconductor company here. $45.30 a share, 10.04 shares, up $279 to $80, or 61%. We'll take that as a win any day of the week. And I mean any day. Then we have Cisco Systems. Another one that's been a pretty good rock here. Not much movement, but we'll take it. $39.46 a share, 5.5 shares, up $30 or 14%. Nothing crazy, but you need positions like that in the portfolio that are just kind of meh. Garmin, tiny position, but a cost basis of $81.50. One share here, up $24 or 28%. Nothing crazy. Percentage gain, I'll take it all day. But nothing crazy. Another chippy company here with Analog Devices. This one's been a beaut for me. I've had it for a long time, though. $81.51 a share. One share here, up $88 or 104%. Doubled it, baby. Wish we had more of that, that's for sure. So then after that, we get into HP, baby. HP has been a beauty for me as well. $22.45 a share, 18.63 shares. Told you to buy it because we're up 75% or $315. I told you to buy this one a while ago, folks. I really did. I like HP, one of the best value companies out there right now still. Then, we skipped too far, Activision Blizzard, cost base of $68.96, 4.5 shares. We're up only 12% or $39. Really holding this one on for the Microsoft deal at $92 a share. This is going to be a big win for us. We're going to make a lot of money on this one. Tempted to buy more, but we will see what that looks like. Then we get into our real estate investment trust, folks, the REIT sector. Okay? We got a lot of dividends earned out of this sector here, and it's great things. Realty Income, we start with them. $56.47 a share, 25.2 shares, up $288 and not really 20%. This is not a company I'm looking for really capital gain on. It's one I've been focusing on dividends, a monthly dividend company, and you see that with the dividends I've been paid. Let's show more, okay? Let's show more. Let's show you the dividends we've earned from Realty Income, and you can see how it's been growing. You look back just, let's say December of 2020, $5.03 a share is what $5.03 I was earning in dividends every month. Now you look forward to this month, a year and a half later, $6.21. So even in that time, we're compounding it significantly, and it's beautiful to see. So that's why we're into Realty Income. It's great stuff. Then after them, the spinoff I got paid from Realty Income was Orion Office REIT. I haven't put any money into this, but I got 2 shares from them. So this is all just kind of free capital right now, $27. Nothing crazy. I'm just holding on to it. It's fine, all things considered. But it's house money. Let's say that it's house money. Iron Mountain, beautiful stuff with Iron Mountain as well. $32.92 a share, or 35.8 shares. Very impressed with the total return on this position, $753 or 63%. Another one that pays a beautiful dividend, over 4%, and I've been enjoying that as well. I mean, we look at the dividends on this bad boy, and you see it's just been consistently growing just off of what we've had here, from January of 2020, $15 all the way to $21.95 now if you look a year. 2.5 years later, it's beautiful. They pay quarterly, but it's beautiful to see. Then we have OHI. Nothing crazy with share appreciation, but it's a yielder of over 9% right now. 28.41 my cost basis, 45.8 shares, up only 4.5% or $58. But with dividends, we are up a lot more. We're talking about a 9% yielder, folks. It's been a beauty for us. Arbor Realty Trust has been one of the biggest wins for this portfolio. $10.71 a share on the cost basis. 100.5 shares, Total return of $589 at 54%. Not only that, but this is our biggest dividend payer. Again, you see it pays quarterly. I'm going to get $38 this quarter from Arbor Realty Trust. A massive yielder on Arbor Realty Trust. I love the company quite a bit. It's been consistently outperforming the total market. It's just been great, and you earn dividends on top of that. Not only share price has been outperforming, but the dividends are a great bonus. Apple Hospitality, cost basis of $14.26, 66.3 shares, up $157 or 16.65%. Nothing crazy. This is a monthly dividend payer as well, paying 5 cents a month at the moment. Prior to 2020 was paying 10 cents a month. Given the results I've seen in the earnings, I believe within the next 2 quarters, they may wait until next year's, which will be 2 quarters from now. They will be bringing that back to a 10 cent a month dividend, which is beautiful when you talk about having, 66 shares. That would be $6 a share or $6 a month. I mean, I'll take that all day. But we'll see what that looks like. I do think they will bump it by starting next year, though. So, Southerly Hotels, absolute stinker. What can I say? $2.17 a share, 253 shares, down $91 or 16% downward movement on this one. Was a position I had in my M1 Finance portfolio. I did actually transfer it over here because it was no longer supported on M1 Finance for whatever reason, but it's been a garbage company. I feel relatively okay about the long-term future of this company when you look at experiences, but again, nothing good right now. But once it starts paying a dividend, people will flock back in. Right now, it's just kind of dead money, though. I can't lie to you. Apollo Commercial Real Estate's been a beauty for me. $11.85 a share, 91 shares, up $84. Really nothing crazy, only 8%, but it is a yielder of over 10% as well. And you look here, the yield right now over 10%. It's beautiful. Shares are valued pretty cheaply. It's been a big winner for us, pays a beautiful dividend for us every single quarter. NRZ, another one that's in the similar boat. Not a lot of capital gain here necessarily. $10.12 a share, 48.2 shares, $56 or 11.47% up. But again, a yielder of over 8%. It's a beautiful quarterly dividend payer. I earn a lot of money from NRZ. I really do. New residential investment, I do. Prospect Capital is another monthly dividend company, a business development company at that. $6.04 a share, 50 shares here, $82 up or 27%. Is pretty nice because I'm not buying it for that. I'm buying it for the 6 cents a share it's paying every single month, which is beautiful. And again, you can see how that's really grown just historically. We look at the history of that, and it's been growing pretty well. If you look at the dividends, without even buying any, you can see it just continues to grow from even just July, or let's compare year over year. This payment was $2.74. Now, without even adding more shares, by buying them just through dividend reinvestment, it's worth $3 this month. So, that's the beauty of compounding. It really is. So then we'll get into our ETFs we own. First off is going to be JEPI, which is obviously a covered call ETF, a little bit different there. Not really going to get into cost basis with these. I will first show JEPI because this one I have for dividends. It's a beauty. We're right around break even, by the way, but this is a beauty in terms of dividends. And you can see every month we're earning. It's a variable amount because it's obviously based off the income they earn. But the overall amount is going up over time, just given that I'm getting all this reinvested. When you're talking about every month, somewhere around $10, that's pretty nice because that's buying me an additional, 1/6 of a share anyway. So over 6 months, I've get a whole new share, which is, another whatever that dividend amount is. But it's beautiful. It's beautiful to see. That's all I'm saying. SCHD is a beautiful dividend fund. It's been consistently outperforming the market. That's why we have 27.18 shares of that. Beautiful stuff. SPHD is a monthly dividend fund as well, tracking the S&P 500 high dividend companies. 15.4 shares. SPYG, a growth fund for the S&P 500, 5.69. SPYD, another dividend fund here, 12.16. MGC is one that I transferred over, as well as IVV. Beautiful stuff there. VFH is the Vanguard Financials ETF, one that I just added recently to the portfolio, which I'm pretty happy with there. We'll be continuing to add on to this one as we feel pretty good about the financial sector going forward. I really do. KBWD and KBWY are both monthly dividend funds as well. And this is one I will definitely show the compounding on. We'll take a look at KBWY for this, just to give an idea of what we earn here. Let's look at the show more and do just dividends. This one pays monthly as well, and you can see it's a variable amount as well, but it's relatively around the same amount. And you can see just over the last year, we look from May of 2021, $3.16, now earning me $5.83 this month. This thing's been a beauty for me. It really has. Despite really no share appreciation, let's be clear with each other, not a lot of share appreciation there, but it's been a nice dividend payer, and I'm building that position so I earn more and more in the future. 65.8 of KBWD, 51.8 shares of KBWY, QILD, another covered call ETF. Following QILD, 29.26 shares though. Nice. An ETN that I own is going to be USOI, which is tracking oil. Pays a massive dividend. It is variable, but 62.13 shares. Pays me a lot every single month, I'll tell you that, which all gets reinvested at the current moment. DIV, another super dividend fund here, 11.95 shares. DES, 2.12 shares. SNSR, Internet of Things Fund, small fund here at 1.01. Then we get into our speculative companies here. We have NEO, which has tanked really over the last year, 56% downward movement, but is up massively over the last 5 years again. And you can see that because our cost base at $2.07 is up $379 or 733%, was up much higher. We were talking about 2,000% up earlier this year, but unfortunately we're not quite there yet. But I do still feel good about the long-term value of this company, so I'm going to be holding on to those shares at these levels. Then we have Penn. This one's been a garbage one, Penn National Gaming. I felt really good about this one. I don't see why we're not seeing much more share appreciation. This $55.87 a share, 5 shares. I'm down $119 or 42%. Look, they're will be legalizing gambling in California here shortly, which opens up a massive market. I just don't see why this is not up higher than it is. I mean, we're focused on sports gambling, which has been going up massively consistently year over year. This is a great company long term, though. A good speculative play because they'll be capitalizing a good bit of the market with the Barstool Sportsbook and just in general making plenty of money. I mean, I don't know. I just think it's being unfortunately unfairly maligned by the general market. But another terrible one for me is Energous. These speculative stocks it's been a horrible year for them, obviously, as you can tell. Not the market for this right now. $2.33 was my cost basis here. 111.29 shares. I'm down 56% or $145. Energous doesn't really have a product on the market right now, so I get it. Really doesn't deserve to be trading right now, let's be clear, but I'll be holding on to that one just on the off chance it pops. You never know. Plug Power. I bought back into this one. I did sell it like a gain of $600 or something before. I bought back in to see what happened, and I sold half of the position I bought back in on for a nice gain of over $100 again, because the shares went over $35 again, and then now it's been hit pretty hard. This was prior to this year. Obviously, this year it's been hit pretty hard. All these electric vehicle speculative type companies. This one's hydrogen-based, but still, alternative energy companies have been getting hit hard. $25.86 a share, 8 shares, down $56 or 27%. Just going to be holding on to that one because I do think long-term I actually really like Plug Power, and I think they're going to be worth a lot of money in the future. given the industry they're in. They're going to be the leader in hydrogen power, no doubt. Then we finish off with a company that is dead money, New Age Beverages. Does not show my cost basis, but it is around $2.85, unfortunately, a share. I'll be 100% honest with you. This is my worst position. I'm down around 80%. I mean, this one's terrible. Total value, I mean, we're talking about $200-something, 185 shares. It's a garbage one. This one's been terrible. Probably going to get delisted soon, but that's what I got. Folks, that's my portfolio. I hope you enjoyed this transparency, and I'll see you next time, folks. Every month.